Hey, I'm Sasha Evdokov, founder of Rise to Learn, and in this video I want to share with you 7 key tips about how to trade better and how to take your trading a little bit more to that next level. So it'll just make you think a little bit different. So tip number 1 is have an open mind when you're trading. There isn't just one way to make money in the stock market. Many people think that you just buy low and then sell high. And yes, this is a typical mentality, but that's the speculative version of trading. So understand that there's more than that. Now you can also sell things short, meaning you sell high and buy it back lower. But of course, this is a little bit more intermediate or advanced concept. Now going beyond that, remember that there's also Forex, there's also commodities, and then you have options. And with options, you can trade so many ways. You can do option spreads from iron condors to butterflies and calendar spreads, which is some of the things that I like to do actually in my own retirement account. So again, you have to find the ways in order to make money in the market and look at the different strategies and have an open mind. You can't just think one way or one directional, and if you do, you could get burned. And that's what most people do, is they just think, okay, this is my only way to trade and this is how I'm gonna trade because this is what I learned 10 years ago, that's what I'm gonna do from now on. Now, if it works for you and you're making consistent money, then by all means, that's great. But you're gonna have to learn and understand that there's not just one way to make money in the stock market. If you're frozen up at a certain level and you're not doing it correctly, you're not making consistent income, then you're not doing something right. So there's more one way to skin a cat, there's more than one way to make money in the stock market. Look at all the different ways and see which one fits your risk and reward strategy. See what fits your risk profile. See what fits you, and then make the decision and create a system around that. Tip number 2 is remember that the news and the media is really all about hype. It's there to give you insight, information, to show you what's kind of moving, what's going on in the market, maybe the economy. But remember that some people's agenda out there is really to persuade you to buy into what they're saying. So that way, if for example, they upgrade the stock, they want you to purchase that stock so they can sell back into you. And vice versa, if they downgrade the stock, they want you to sell the stock so they can buy into the stock in hopes of it running higher. Now, this isn't the case for everybody, but this is typically what happens. But a lot of the times the news, the media, all those news channels that you watch on stock trading, a lot of it is just for entertainment purposes. And sometimes it's great to get some alerts here and there, but it isn't always the best methodology in order to be consistent, because it's not you doing the homework. Because how do you know when that other person is going to come on TV again? How do you know when that other person is going to upgrade or downgrade the stock? You really got to be focusing in on these specific people each and every time. So stay away from the news and the media. I mean, it's great for entertainment purposes, but it's not what you want to trade consistently. Tip number 3 is learn to trade first and manage your risk. Manage your money first before increasing your share size. So many beginners try and just go out there and trade 20 shares or 50 shares or 200 shares or 2,000 shares. They jump the gun before they really get there. Now, if you have a system and strategy in place to be able to go long-term investing, then obviously you might have to look at things a little bit differently because you're in it for the long haul. But if you're trading on a time zone or time level of holding your shares or option contracts for maybe, let's say, a few months, maybe you're just holding it for a year, then you're gonna have to maybe try 1 or 2 years to see how things play out and see if you're consistent before actually upping the ante or upping your share amount for the company. So I would say, stick to maybe 3-5 shares. That's all you really need, and see if your system is actually working. Test it out, put your emotions to the test and see how well you do. Once you do it, and if you are consistent, you can always increase your share size to 1,000, to 5,000, to 20,000 shares. Don't worry about that. But if you lose it all in the beginning, how else can you continue? So start first, figure out and get the system down before you actually jump head first into the water trying to trade large lots and large contracts. Tip number 4 is that you have to create your own personal risk and reward strategies. You have to create your trading system. No one can do it for you. I can't do it for you. And you shouldn't be following anyone blindly, including myself. I post on Twitter, I post on StockTwits, and I'm out there to kind of share a little bit of insight and information when I have time. But I don't always have the time to do that kind of stuff. So you need to really hone in and figure out your risk and reward strategy, your own plan. See what works for you. That way you can be consistent. This is all about coming down to you. The responsibility is on you because no one's gonna do your homework for you. You're an adult now and you need to take control into your own life. So if you're 20, you're bound to get a little bit of extra help and leniency from me. If you're 30, if you're 40, I'm gonna harp on you a little bit more. If you're 50 and you don't wanna do your own homework, I'm gonna pound on you a lot more than other people. So you need to be prepared to take responsibility and put things into your own hands and create your own trading system. Now, when I say stock system, I'm really talking about thinking of this as a business. Now, if you have a business where you're running desserts and you're creating desserts and you're buying a lot of inventory, like a lot of different fruits, a lot of different flour and wheat and so forth, then you're going to have expenses. The same thing in trading. It's a game of inventory. If your fruit goes bad after 3 to 5 days, you need to be making sure that you're producing a lot of different desserts and selling them. Same thing with stocks. If you're buying a lot of inventory, you need to make sure things are moving in the right direction. Otherwise, you need to get rid of that inventory. So don't let your fruit go bad. And what happens is a lot of people love to hold on to those losers. They love to let that fruit rot. Not just rot, but they love to have that fruit to have fruit flies. It's got, mold, everything. And then finally you start to get sick. Don't do that. You can't let that stock kill you. And you want to make sure you run it like a business. If you're making $500 from each winning trade, then maybe you might not want to lose more than $100 on any other trade, because it gives you an opportunity to lose 5 times on your winners, because that's where you'll break even. So focus on it as a business, and that's why I say create your own stock trading system. Tip number 5 is remember that people have different perspective. Some people have a detailed vision view, other people have a wider vision view. And by this, I mean some people are honed in only on the intraday charts. Some people are honed in only at the long-term 100-year plan. Think of Warren Buffett, he's a longer-term investor. Same thing goes in real life. Some people just live moment to moment and don't plan for their retirement. Other people plan and work for their retirement. You have to know what you are. It's not about being a better in one way or another, but you have to know what works for you, kind of going along with one of the other tips. So figuring out the way you see things and the way you view things, you might want to take a step back and then view things from a longer view and then also a shorter, close and zoomed in view. And understand that some people are bulls or bears, just like Jim Cramer on TV. He might say, oh, this stock is fantastic, but the downside behind that is they might not tell you how long of it is a bull stock. How long should you hold that stock? Is it only for a month, a week? That's the problem with going along with tip number 2, listening to other people. So again, understand that, looking at the different view perspectives, you're gonna get a different perspective from everybody. And that's why, again, you gotta do your homework and you gotta step back and see that forest. You gotta see the whole vision of how things work. Okay, tip number 6 is a little bit more on the technical node. So if you're looking for a speculative direction plays, if you're looking to trade some sort of direction on a stock and you're looking at charts and you're looking at technicals, don't just look at the intraday and see how many times it bounces off of that. By intraday, I mean the 30-minute time frame or the hourly or the 15-minute. Look on the daily or maybe look on the weekly, because within those 30-minute time frames, support and resistance is almost non-existent. There is some, but a lot of it is machine oriented or computer triggered. So if you look at the daily or more even the weekly, you have a much better chance to looking at the trend, and that's where the big bucks are. Now, if you're looking at option spreads, if you're looking at binary options, if you're looking at calendar spreads, if you're looking at iron condors and butterflies and things like that, then make sure you look at your Vega. So many people do not understand the Vega, which is the volatility risk. So learn those and understand those key things, whether you're doing the option spreads or you're doing a longer term speculative trade. And finally, tip number 7 is remember that there's more to life than just money. You know, you need to go out and remember that this is just a tool. It's a tool to help enhance your life. It's not just about making money. It's about living life. It's about contributing back to others. People wonder why I make these videos. I love making the videos much more so than trading. It allows me to connect with other people. It allows me to contribute back. Trading is a tool. It's a tool to help enhance your life, to help do the things that you want to do. Okay, so remember, don't get sucked into the funnel of just greed, greed, greed. Go spend time with the family, go spend time with your kids, go enjoy life with friends. But if you enjoy trading, by all means, reap the rewards and benefits that you can, but don't forget the bigger picture. So keep learning, keep studying, and keep taking yourself to that next level. Because when you win, we all win. Because I hope that you go out and do what you love, and then you go out and contribute to other people. And that way you can live life abundantly. Thanks for watching, and if you enjoyed this video, by all means share it with all your friends in social media. And if you'd like to see some detailed courses and get insight of some of my course material, check out tradersfly.com, where I have some courses that go in detail about the psychology of learning, the psychology of education, and how to take your trading to that next level.